On the third Friday in March every single year, SCHD does what's called a reconstitution. And in case you've never heard the term before, if we think about an ETF as a basket of stocks, a reconstitution is basically just reorganizing what's in the basket. So every year when they do this reconstitution, they take some stocks out, they put some new stocks in, and they do all of this just to make sure that all of the holdings still align with the fund's main objective, which in the case of SCHD is to track as closely as possible the total return of the Dow Jones US Dividend 100 index. And this index is designed to measure the performance of high dividend yielding stocks in the United States with a record of consistently paying dividends. Anyway, in this video, I'm going to share with you which companies they axed from the fund, and we'll also go over all of the new additions that were lucky enough to be included in the holy grail of dividend ETFs. Now in total, guys, 23 different companies were removed from SCHD, and the only reason they'd have to remove a company during the reconstitution is because it doesn't meet the fund's criteria, which they list on the fund's prospectus. To be an eligible candidate for SCHD, a stock must have sustained 10 consecutive years of dividend payments, it must have a minimum market cap of $500 million, which really isn't that high at all, and the stock must meet minimum liquidity criteria, which means they have to maintain a certain average trading volume. From there, the highest yielding dividend stocks out of the bunch are then selected based on 4 fundamental-based characteristics: cash flow to debt, return on equity, dividend yield, and the 5-year dividend growth rate. Now with that said, it seems that 23 different companies no longer met this criteria. That's how many were removed from the fund, with some of the most notable ones being Broadcom here at the top, which made up 4.83% of SCHD, Merck, which was another one of the bigger holdings in the fund, making up 4.67%, ADP, Automatic Data Processing, was also removed, making up 3.1% of SCHD, along with Blackstone here in 4th place, BX, which made up 2.65% of the fund, and then ITW here, which made up 2.11% of the fund. And together, these 5 companies made up 17.36% of SCHD. Out of this bunch, Broadcom and Blackstone saw some pretty solid market-beating gains in the last year, while the other 3 did underperform the S&P 500. But in general, at least for one reason or another, all of these stocks no longer met the criteria for SCHD, or at least they weren't as fitting for the fund compared to the 23 additions to the ETF, which we'll get to in just a moment. But first, let's take a look at all of the other stocks that were removed from SCHD. Along with those 5 that we already mentioned, other companies like 3M were removed, Allstate was removed, Tyson Foods was removed, Kellanova, Williams-Sonoma was removed, which is actually kind of a bummer to see. This stock has just been on fire lately. And then we have some others removed, like International Paper Company, Paramount, First American Financial, Advanced Auto Parts, as well as a handful of other names that, truth be told, I'm not quite familiar with. And by the way, guys, if you want to grab this spreadsheet, I have it linked in the description of the video for you to check out, and I also have it linked in the pinned comment. The spreadsheet shows all of the holdings before and after the reconstitution. It shows all of the stocks that were removed from the fund, which we just looked at, and it also lists out all of the additions to the fund, which brings us to the next item on the agenda. So from the reconstitution, guys, SCHD added just as many stocks as they removed. There were 23 additions, and here's the full list. There's actually some really solid companies in this, guys. First and foremost, we have Bristol Myers Squibb here at the top. We've got the Hershey Company added to SCHD, Cincinnati Financial Group, Skyworks Solutions, Dick's Sporting Goods was added. That's pretty cool. And then continuing on down, another one that I thought was very interesting was this company right here, Vail Resorts Inc., ticker symbol MTN. I've always thought this was a very interesting company. They own and operate some of the world's best ski resorts. We're talking Vail, Park City, Whistler, Breckenridge, and actually a few mountains I grew up going to in Lake Tahoe, like North Star, Heavenly, and Kirkwood, all of which are known for just constantly being packed with people, by the way. North Star is always busy, but it's such a good mountain. Anyway, guys, moving on, the reconstitution also brought Nexstar Media into the fund, which is really cool. I know Russ will be happy about that, and I'm actually pretty stoked about that too. Nexstar seems to be a great company, and they actually just announced a killer 25% dividend raise. That's what I like to see. And I've got to admit though, most of the other companies here on this list I'm not all too familiar with the exception of Insperity here, which I actually do really like. And this is another dividend growth behemoth with a 20% 5-year dividend growth rate. So now that we've gone out with the old and in with the new, this is what the before and after looks like for SCHD's top 10 holdings. More or less, guys, it's going to be pretty similar. 8 out of the 10 stocks are still present. The only new additions to this top 10 are going to be Pepsi and Pfizer, which are only coming to the top 10 because 2 previous companies, Broadcom and Merck, were removed from the fund altogether. Now, at the time I'm recording this video, there's no information about the weighting of all of the new additions to SCHD. We're not quite sure yet what percentage each holding is going to make up in the fund. So keep in mind that the percentages here in the top 10 stocks is likely to change some once we get more clarity on the percentage weighting of those new additions. So we'll see what all that looks like when the dust settles. But still, with all of that said, it does beg the question, what does this mean for SCHD? And also, what does this mean for us investors moving forward? Well, honestly, I don't know, but I don't think anything crazy is going to happen. We'll see how these changes impact the performance of the fund over this next year, but ultimately, the fund's main objective is still exactly the same, which is good. And so is my plan with SCHD. I still plan on dollar cost averaging into the fund every single week to buy as much as I can. And by the end of the year, my goal is to get to 100 shares of SCHD, which I think is totally doable. I'm at about 64.5 shares right now, and on average, I'm buying a whole share every week, so I'm pretty confident I can get there. All in all, the goal is to just keep collecting that cash flow. And if you want to see exactly how much money I've made with dividend investing so far, then check out this next video right over here. I've been investing for about 4 years now, and in this video, I'm breaking down the performance of my portfolio so far, along with all of the dividends I've received up until this point. So click right over here to check that out, and I'll see you in the next one.